So there's no doubt about it. You got this amazing bullish sentiment out there. Risk on. We see it in cryptocurrencies. We see it in stocks. We even see it in some effect in gold and in oil. But for me, I'm not buying it. I think the market is coming off of this, what I call the January effect, where you had all the tax loss selling taking care of a lot of sellers in December. That kind of makes the markets generally buoyant in January. Then you throw in the mix of the Fed obviously coming down to the wire in terms of just hiking another 25 basis points, maybe a couple more times, and the market's getting that giddiness. Remember, the market looks 6 months out. So they're saying, okay, within 6 months, the Fed's done hiking. What they're not recognizing to me is that the Fed will not be lowering rates in 2023.
Gareth Soloway, the chief investment strategist at infamousmoneystocks.com and a well-known technical analyst, is skeptical of the ongoing bull run in cryptocurrencies and stocks. Soloway has been warning that the recent cryptocurrency market rally is a bull trap and not the start of a bull market for the past 2 weeks, during which Bitcoin's price rose to over $23,000 and the total cryptocurrency market cap shot to a multi-week high of over $1 trillion. The seasoned trader recently discussed his bearish forecasts for the leading cryptocurrency asset in an interview with the TD Ameritrade network. According to Soloway, the ongoing rally is just the January effect and the market's relief that the Federal Reserve is pulling the brakes on its aggressive interest rate hikes. However, popular technical analysts say the relief is too premature, and Soloway adds that the market seems oblivious to the facts that inflation is still well above the Fed's 2% target, and the economy is heading into a recession. When the market does catch on, Soloway says in the interview, there will be a day of reckoning, and Bitcoin's price may fall to his previous prediction of $10,000 or $9,000. But before all that takes place, Soloway predicts that Bitcoin's current upswing could lead the cryptocurrency to $25,000 in value. On Tuesday, he tweeted an example of his stock market forecasts, which read, "Stock market warning, the SPX and Nasdaq are sharply higher, but volatility is not dropping. This tells the trading community smart money is buying protection and to be careful."
The thing is, I mean, it's just common sense in that you have inflation that, yes, it's coming down. The first chunk of inflation, it comes down quickly. That last little bit from 4% to 2% is going to be really, really sticky due to wage increases and all these other factors. And that's going to keep the Fed very nervous about replicating what we saw with Volcker back in the 80s, where inflation roared back. And they're going to be very, very careful not to lower rates until things economically get so bad. And I'm not talking about, 5% unemployment. I think the Fed would wait until probably beyond 5% unemployment before they even think about cutting rates. And the market is just kind of going on this hopium, which you understand, right? I mean, the market has been conditioned for the last 10, 15, 20 years to really always think that the Fed will bail them out, even when the Fed talks tough. And so I think the market is going back to the old playbook of saying, hey, listen, let's react to what the Fed does, not what they say, versus them saying right now they're going to be harsh and not lower rates. And ultimately, I think that's where the market's having a disconnect. But like you said, it doesn't mean the markets can't rally in the near term. I just think we have to be very aware that the Fed, there is going to be a cliff at some point where the market says, wait a minute, yes, the Fed's done hiking, but we're not going to see these cuts. There will be a day of reckoning where they realize that. For instance, I think Bitcoin at most has upside to about 25,000. 25,000 to me is a confluence of major resistance. Okay. So I'm going to actually start to look to short it around that level if we hit that in the next couple days or weeks. And then on the other side, there's some opportunities on the short side. Like I started to nibble at a short on Apple today. That's hitting a key gap fill, a technical trend line, and also even natural gas. I mean, there's always opportunities in the market. Natural gas hit the $3 level, which is a major technical support. It's down something like 50% in the last couple months. There's a swing trade opportunity there for a snapback to 360 or so, which again, in this market, you just kind of look for these little opportunities and kind of print money as you go. One of the things, by the way, to mention is that today with the market rallying very early on, one of the things that struck me was that the VIX was not falling dramatically like you would anticipate. And what that tells me is that big money is starting to accumulate protection by buying the VIX. And again, that's something to look for. So for me, that's exactly what I'm doing. I'm shifting into defensive names, a Lockheed Martin that's pulled back significantly recently, and other kind of defensive plays while looking to short the high cap tech numbers that are coming out in the coming days over there with Apple and some of these other players that have seen big moves in the upside in the recent days.
the real downside targets that we discussed earlier as being possible this year, 10,000 on Bitcoin, etc.? Do you still think that is a first stop before your longer term bull case?
I do. I still think that, again, what we're going to see is this kind of regulatory framework be announced. That's going to give a little bit of confidence to bigger investors. But the big issue later in 2023 is that we are going to see the economy entering recession. The S&P 500 probably does take a bigger leg lower. And my thought process is that as risk assets sell off significantly, Bitcoin and crypto will get caught up in that and ultimately see a big hit down. So 10,000 still looking like it's the downside in Bitcoin.
Regardless of these obstacles, the number of people using cryptocurrencies on a global scale increased from 306 million in January to 425 million in December of 2022. The report claims that two major occurrences last year drove the majority of the increase in Bitcoin ownership. Both the Central African Republic's adoption of the leading crypto asset as legal tender, and global investment Goldman Sachs's offering of a Bitcoin-backed loan in April 2022 are milestones. According to the study, the biggest factor driving the token's widespread use in 2022 will be the merger of Ether's complete switch to proof of stake. What do you think of Gareth Soloway's January effect forecast in the report on the adoption of cryptocurrencies on the website crypto.com? Leave a comment with your ideas below about Gareth Soloway's thoughts, and we appreciate you tuning in to Market Empire. If you enjoyed this video, please give it a thumbs up, share it with your friends, and subscribe to the channel.